It's really how you apply it, right? What are you going to do with that, right? There's a lot of social science disciplines that I think people look at and say, those are not useful majors, right? But if you apply that knowledge and the skills you learn in those majors in a creative or the right context, they can be extremely valuable.
Do you think your interest in just many, many different topics is what drew you toward entrepreneurship?
Absolutely. And it's what I loved when I was in consulting as well, right? Getting to work with different companies in different industries in different places. You're constantly in learning mode, right? You're constantly learning not only about your own company, but your market, future markets, right? Kind of expansion plans, new people, new teams. So if you're not always learning as an entrepreneur, I think you're going to run into trouble.
Welcome to Forging the Future, and today we have a fantastic guest. He is a seasoned executive, consultant, and co-founder and chief growth officer, which has just closed a $60 million funding round and a $1.2 billion, that's billion with a B, valuation. And he's also a self-described world champion generalist. I'd like to welcome Remington Tonar to the show.
Hey, Chris. Good to be here. Thanks for having me.
Thanks for coming. So Remington, out of all your titles, I'd like to start with the one that you mentioned, which I find the most curious, World Champion Generalist.
Yes. Well, this is the one that's the most important to me, perhaps. A lot of people know this. I have a diverse academic background. I actually studied theology in college and have a couple graduate degrees in theology. I wanted to teach college religious studies. And then at some point I realized you can't make any money doing that. And then switched out and then, went to NYU and studied something more practical. Over the course of that journey, held jobs in political campaigning, in, restaurant operations, in IT. So I've done a lot of different things in a lot of different places. And then after NYU, I got into consulting. But across that time, I really was able to carry my background in the humanities with me, right? I mean, one of the things that theology, philosophy, the humanities do is teach you how to learn, right? And teach you how to analyze information, study information, think critically, right? Process complex ideas. And obviously those skills are applicable in any line of work. And so at Cart.com specifically, I was our founding chief financial officer, and then did a stint as our chief operating officer and chief commercial officer, and then ran investor relations and fundraising for a while, and currently am running all corporate marketing, strategic partnerships, a lot of the corp development, investor relations tasks, internal and external communication. So my background and the things that I've done have enabled me to flex into a lot of different roles and be something of a corporate generalist where if there's no executive owner for a task, I can step in and lead that until we find someone, the right person to actually lead that function and take that function forward. It's been extremely valuable at a company that is moving as fast and has moved as fast as Cart.com, having a utility player that can kind of pop in and pop out, play multiple roles.
Swiss Army knife.
Swiss Army knife, exactly. Yes, those are handy once in a while. But I actually have come to believe that a lot of startups that are moving quickly, or even corporations that are going through periods of change, right? Or maybe have, are going through some type of restructuring or reorganization, could benefit from, a chief generalist, if you will, who has deep knowledge of the company and what it does and its people, but also can play multiple functional roles for temporary or brief periods of time.
Wow, chief generalist, that would be interesting. I think often for startups, it is important to wear many hats. Our word for that is the man of many hats, right?
Yes,
and so because you have to do everything from emptying the trash can to actually making the business run. But someone that actually excels in that. I think you might be the first theologist that I've had this show.
Yeah, probably. And, one of the only ones, although I do know a couple of others that have matriculated into the business world. Not many of them make it over.
I've heard of quite a few philosophers, for example. And I think Carly Fiorina, back in the day, she was a different major. I think that's an important point for people going to college as well, that the degree really doesn't matter as much as you think it does in a lot of cases. It's like you can get a degree in so many different things, and then, your career is going to take you on a different path.
It's really how you apply it, right? What are you going to do with that, right? There's a lot of social science disciplines that I think people look at and say, those are not useful majors, right? But if you apply that knowledge and the skills you learn in those majors in a creative or the right context, they can be extremely valuable.
Do you think your interest in just many, many different topics is what drew you toward entrepreneurship?
Absolutely. And it's what I loved when I was in consulting as well, right? Getting to work with different companies in different industries in different places. There's diversity and novelty to that. And I really liked the ability or the opportunity to be able to try new things, explore new industries, learn about new industries and new markets. And of course, as an entrepreneur, you're constantly in learning mode, right? You're constantly learning not only about your own company, but your market, future markets, right? Kind of expansion plans, new people, new teams. So if you're not always learning as an entrepreneur, I think you're going to run into trouble.
Yeah, there's something to be said about constantly wanting the new. Right?
Yeah.
And I identify with that as well, both from consulting, my background starting in consulting and getting to work with many, many different types of businesses, from, Coca-Cola or soft drinks to, Compaq and computers. And then actually now I've multiplied that with the venture studio, because we get to work with so many different startups. And so I get to then apply my entrepreneurship and my, love of the new to many different ideas.
Well, the exposure to different industries, different types of companies, different ideas just makes people more versatile professionals, right? Now they have a wider, broader knowledge base that they can take and apply in other industries. And I'm a big believer that there are learnings from industries and unexpected places that can be valuable to, in other industries and other contexts, right? And certainly, the history of innovation is riddled with examples of innovations that kind of were imported, if you will, from other markets or industries or spaces. So I think having some of that breadth of knowledge allows you to transfer insights and apply insights, across industry categories.
Is there anything that you feel like rooted in theology that you've been able to apply particularly in your entrepreneurial journey?
I think there's probably a few things. I think, one is, if you think about religions as organizations, these are organizations that have, in many cases, been around for a very long time and command a tremendous amount of loyalty, and yet sell nothing tangible, right? They're selling an idea, almost like a promise of something in the future. And they're able to obviously raise a lot of money and command a lot of authority even today. And I think there are lessons to be learned from the history of religion and how religion developed that any business can use, actually, in terms of, building a loyal following, building a brand, culture, right? And cultivating a culture among not only your employees, but your customers as well. And then, kind of the salesmanship of it, if you will, right? There's, the importance of belief in what people believe in how they behave economically. And I think there's a lot to be learned there.
Yeah, I had Wade Pinder on, and he was talking about when he first joined Blinds.com and how important it was to him, the culture that he saw there.
Yeah.
How deliberate were you in Cart.com about building that culture?
So Cart.com has an interesting journey when it comes to how our culture has and is evolving. We started off with a very small core team of folks who, in many cases we had worked together before Cart in some capacity or another. So there was that familiarity. One of the first things we did was acquire another company. And that company had, let's say, 20 employees who had, in many cases, been with that company for, several years, if not a decade. And as a result, they brought in their pre-existing culture and their norms. And, we had to determine how to integrate that with this fledgling Cart.com culture. And the Cart.com culture today is really, an emergent phenomenon that has arisen from the combination of not only the organic folks that we've hired, but also the companies that we have acquired and their teams and their founders. And so it's a unique place. I think it does create some cultural diversity that I think is valuable. And just, our business model itself lends itself to that. We have experts in logistics and employees in facilities, right, that are actually moving product in pallets. And then we have software engineers and, brand marketers that are providing services for our clients. And so the diversity of types of people that we have at CART, because of the diversity and breadth of our services and the fact that we've made a number of acquisitions of smaller companies over the last 3 years, I think makes the CART.com culture perhaps uniquely diverse.
It seems like quite a challenge in that to integrate those cultures every time you make an acquisition.
Yeah.
Does it play into the acquisition at all? Like, what the culture of that company is?
Oh, hugely. I mean, and most of the acquisitions we have done have been very founder-led types of companies. And so the founder of those companies really sets the tone for their culture. And so understanding whether or not that founder is a good fit for the CART.com culture is absolutely part of our process, right? They have to not only buy into our vision, that's very important, but then also buy into how we operate and how we act and how we interact. That was absolutely part of the process, because we didn't want to buy these companies and then just cut these founders loose. They stayed on. Many of them are still with us, and all of them stayed on for quite some time after the acquisition to help with the integration. So they really needed to be bought in to both the vision and the culture of the company.
It's almost like hiring someone, right? But it's at a bigger scale.
Right.
You're going to be living with this person, this company for quite a long time, and you need to make sure that actually comes in and it's the right thing. It's
not all about just the technology or the capabilities that you acquire, right? I mean, that's obviously important and a huge driver for why you'd want to acquire one of these companies, but the people are an asset as well.
So let's talk a little bit about your recent funding round and your $1.2 billion valuation. Again, congrats for that on CART.com.
Yeah.
Maybe you can share some insights on navigating that responsibility.
Yeah, well, as you know, Chris, I mean, it's been a really tough environment for venture fundraising. Perhaps the tightest environment we've seen since the recession, and by some metrics, even worse. And we did raise this last round. It was our fourth round of financing. We labeled it a Series C in 2023. In this environment, and it was much more difficult than prior rounds. There's and to some degree a healthy skepticism out there. There's some conservatism and recalcitrance to deploy capital until folks see how things shake out and how the macroeconomic conditions kind of pan out. Not to mention the geopolitical context that we're living in today, and so there's just a lot of uncertainty and ambiguity out there. And of course, the interest rate environment, it just has not done any favors to folks to startups or any company, right, that needs to secure financing today. So it's been a really difficult environment. And we were very happy and frankly proud to be able to get this done, given the conditions out there. So
yeah, congrats for that. It's the worst time in 10 years, I think.
Yeah.
Did you see like a difference in the KPIs that investors were looking for?
Yeah.
I mean, there was, of course, a lot of emphasis on growth before, and then it just switched to emphasis on profitability.
There was almost a myopic emphasis on growth before, right? No, people didn't care about anything else. I mean, to their detriment. I think to the credit of our leadership team and our board and our early investors, we had always had an eye towards running the business in a more sustainable way. Also, because we have, in addition to the software we sell, we have a logistics business. Well, that business has to be run in a kind of cash flow oriented, profitable type of manner. Otherwise, you're going to get upside down really quick. It's a game of inches. And so because we had that culture as part of our culture and that those disciplines as part of our culture, I think we were ahead in some ways of many of our peers and many other startups out there who had not thought at all about their bottom line. And so when the mandate changed after after interest rates were raised and the environment deteriorated a little bit, the mandate, of course, became profitability, cash is king. And it is hard, especially especially for late stage startups, and you know this, that are moving very quickly. It's like the Titanic. You cannot turn that thing on a dime. It is how you're structured, the people you've hired, the number of people, the type of people, the initiatives you have going on are all oriented towards just top line. It's hard to change that overnight. And so when the mandate changed, we pivoted very quickly and laid out a very clear path to profitability. And I'm happy to say that we are now operating profitably. So
congrats on that too.
Thank you. Yes, we're very excited.
That's a super huge, hard pivot, just like you said, to go. And you've created a cash monster on growth.
Yeah.
And now you're all of a sudden they're saying, oh, well, wait a minute. We also want you to be profitable now. Well, that flywheel's been spinning for a while.
Yeah,
right?
Exactly.
All right, Remington, you are 3 years old now?
Just three years old.
Just turned 3. Yeah. You're just a youngin'.
Yes, we're a very young company, yeah.
So much. I mean, how did you manage to accomplish all of that in such a short period of time?
Speed has always been one of our superpowers at cart.com. And a lot of, forget startups, a lot of companies try to focus a lot on error prevention and error detection versus error correction. One of the philosophies that we used in our growth trajectory was really by moving fast, how can we create enough value, enough net value, such that we can actually pay down any technological debt or organizational debt that we incur in moving that quickly, right? There's an opportunity cost to moving fast. You do incur technological debt, technical debt, organizational debt. But if you are able to move quick enough and your speed is rewarded, you could end up having enough, whether it's dollar value or whatever type of value, to actually go back and fix those mistakes while you're still moving very quickly in a market that was as dynamic as the one we started in, which was still during the pandemic, late 2020. Speed was key. If you weren't moving fast, you were getting outmaneuvered and outrun. And so we've always tried to move very quickly. One of our goals is to help our customers also move very quickly. But we have made some decisions and taken some risks on decisions that I think other people wouldn't have made or would not have been willing to take because they were afraid of the cost of that speed. But we found that, time value of money, it's IRR, right? The time in which you do something matters, and you can create more value on a relative basis sometimes if you're moving quickly. And that's the attitude that we've always taken to growing the company.
Sounds like you subscribe to Mark Zuckerberg's move fast and break things.
Yeah, exactly. Move fast and break things. And look, sometimes, the things you're breaking are the things you want to break. Other times things break that you didn't want to break. But if you've been successful, you can go back and fix those things, right? And now you're in a better position in the market. And it's easier to go back and fix those things like once you've crossed the threshold than to, not cross the threshold because you're worried about breaking something, right? I mean, that's a paralyzing kind of risk, type of an analysis. There's analysis paralysis there, and we've never let ourselves get paralyzed by the thought of, what if we break something we don't want to?
Exactly. Well, it's an important point, and people shouldn't be afraid to break some.
It's Schumpeterian creative destruction, right? I mean, there's always things that are going to be broken in innovation and entrepreneurship. That's the nature of it. And sometimes those things are collateral damage, and other times they're things that you intend to break. But in the end, I think what we all believe as entrepreneurs is that by catalyzing and fostering creative destruction, society and markets, economies will be better in the end because of it.
I like that term, creative destruction.
Yeah.
Well, you're a Texas startup.
Yep.
Right? You started in Houston.
Yes.
And you moved your headquarters to Austin.
We did.
I think you're moving back now.
We are.
All right,
yes.
Great. So happy to have you back in Houston.
We're happy to be back.
We always felt you were a Houston startup.
Yes. Well, we've always felt like a Houston startup as well. So, Austin allowed us to hire a lot of fantastic software talent. And we feel good about where we are and that hiring plan and that, with the levels of software talent we have now. But a lot of our infrastructure is still here in Houston.
So speaking of Houston and Texas, I mean, Texas is a budding innovation hub. I think we made the top 5.
Yeah, I saw that.
Startup ecosystems or emerging ecosystems,
yes,
right?
emerging. It's
been a lot of changes in the last 10 years, I think, especially the last 5, at being an entrepreneur here for practically 40 years, right? Tell me a little bit about your, decision and of putting the headquarters here in Houston and starting the business here.
Yeah. Well, all of our founding team, we're all Houstonians. Our initial investors were Houston investors. Many of our board members are still based in Houston. Houston, of course, has great logistics capacity, which is a big part of our business. And now that we've grown and have offices around the world, Mexico, the EU, employees all over the country, it's more important for us to be able to get them in and out for meetings. But the Austin airport has some challenges just with its size, its capacity, et cetera. So there's a lot of reasons why Houston makes more sense for us now, maybe even more sense than it did when we started. We're bigger now. We're at 300 million plus ARR. We need access to resources that were built for companies of our scale and moving at our speed. And Austin's a great town for startups, but we're starting to get into that scale up category where we just need access to a different set of infrastructure.
Well, Houston is good at scale.
Yes,
right?
yes.
Like
everything here is big. Yeah, exactly. It's like a scaled city. Yeah,
exactly. Well, we had the Innovation Awards recently. We had a lot of, there's just so much momentum going on here. And a lot of people forget about logistics and the Port of Houston.
Port of Houston,
one of the largest ports in the world, I think. And besides our space industry and med tech and energy tech.
Yeah, and these are important industries. Other cities have, I think, what most people would consider to be cooler industries. But the industries that dominate Houston are important. They're fundamental. You cannot live without them. And I think that's something Houston should be proud of.
Yeah, absolutely. Well, what can you do without energy?
Right, exactly. Yeah, we can all live without Facebook. We can't live without power. Chris, you've been in Houston a lot longer than I have. So you've seen the ecosystem here change probably from nothing to what we have now. I've only lived in Houston for maybe 6 years, and I moved down from New York where the ecosystem is obviously much more mature. And I was surprised when I came down here to find, Texas, massive state, economic powerhouse, Houston, the 4th largest, soon to be 3rd largest city in the country, at the stage it was at in regards to its startup and entrepreneurial ecosystem. But what have you observed recently? And do you think that at some point the ecosystem started a J curve where there was very little happening and now there's just an abundance of activity? What's your sense?
No, I think it has started the J curve. A lot of people point to Amazon passing up Houston as a wake up call for a lot of people in government and industry, and so things really started to get moving with that. And for whatever reason, great. Because you're right, 40 years ago there was nothing. Yeah, there were no hubs, there were no startup development organizations. There was very little in the way of venture. I remember having a conversation 10 plus years ago. I think it was one of the leading teachers at either U of H or Rice in entrepreneurship, and talking about just the dearth of venture, and he was winding down all of his venture funds, and there was no way venture was going to succeed here for whatever reason, because everyone, partly because of that big scale that Houston was interested in, where they're investing in holes in the ground, or they're investing in real estate, investing in oil and gas and energy.
Yeah, very tangible things.
Exactly. So there wasn't really a startup ecosystem here, and so you were kind of on your own. And if you wanted to build a startup, you had to go to the West Coast, which is why Silicon Valley really took off, because that was a magnet for everyone. There's nowhere else to do it in. But over the last 5 to 10 years, it's been a tremendous amount of change and effort. And I think J curve is the right term for it. And with, organizations like, the Ion and the Canon and everything, everyone takes off, Greentown Labs, et cetera, Stockton Venture Studio, a renewed interest in, hey, we need to create this ecosystem and build it. There's still gaps that we need to fill in, because what we want to have is startups like car.com get started, get funded, have success, build up their teams, start hiring talent, get more money in, exit, create some millionaires. kind of start that flywheel again.
Yep.
Those people want to start businesses and say, hey, actually, you can start and build a business in Houston and be successful and make a lot of money as an investor in that in those spaces.
I think Cart.com in some ways is a great success story of everything the ecosystem is doing. Omer and I met at the Cannon. And, Mercury was one of our early investors. Jim Jacobson, who's still on our board, was our first investor. He was our seed investor and was part of the founding group. But he had, him and his brother built and sold Arctic Outdoors in Houston, based in Houston, right? Houston guys. So, I think the fact that the team kind of really formed in some of these startup development organizations, or at least met there. We had a lot of our initial meetings at the Cannon, and all of our initial investors were Houston entrepreneurs or funds, is a real testament to what all of these resources can do for startups and entrepreneurs now in Houston.
I think you can see that flywheel some in going from blinds.com and the path and the exit, now cart.com, and then everyone's kind of, it's starting to spin there, right?
There's a little blinds mafia that exists now, I think.
By the way, I am actually an investor in cart.com. Through one of the funds, JR's fund, Integrated.
Integrated. So you got a little piece of the action. Well, Integrated came in pretty early, so I'm sure you and your fellow LPs are extremely happy with the performance to date. So
yeah, definitely. What else do you see that we need? I mean, you came in as an outsider. You've been here 6 years. I mean, what other gaps do you see? I know you were surprised in the beginning. There just really wasn't much, but what else is there?
I think there are some groups in the city that still feel somewhat territorial about their piece of the pie or their swim lane, and almost defensive about what they're doing. I think there's a lot less of that kind of territorialness since I moved here from then to now. I feel like it's getting better, but I do occasionally still sense that there's fiefdoms, if you will, or silos at best, where there's folks who are doing X over here and they stick to themselves, and there's folks doing Y over here and they stick to themselves. And part of it's just geography, right? Houston is just a sprawling city. It's not extremely convenient for entrepreneurs to be able to travel from Ion to Cannon to all these different areas, in a day, right? And so I think the question of how do we continue to try to conquer the geographical impediment, and of course the geography provides a lot of benefits as well, but in some cases it's an impediment to creating those collisions and the serendipity that you have in much denser cities. And so how do we continue to address that intentionally to continue to get different types of stakeholders in the same room, right? There's folks who are doing amazing work down at Texas Medical Center, right? But like those folks should be cross-pollinating with the energy crowd as well. Now, initially you may say, well, what do they have to do with one another? But the nature of innovation is such, that you're always kind of mining ideas and insights from other places. And so I think that diversity of ideas is super important.
Yeah, those collisions are extremely important. I agree with you. I was at the ION yesterday and was there for a committee meeting, but they were having an event there. It was women-focused, healthcare related. Yeah. Hospitals coming in. I'm meeting people walking out the door from like Texas Children's, and they're there for that event. And those collisions can result in great things. And I think also one of the things that I'm trying to do is work on enabling that collaboration between the organizations. I'm a big believer in the tide raises all boats. We're not trying to compete against each other, right? There's enough pie for everybody, and so. And I even have competitors that I work with, or I know and communicate with, and I know we're not like competing for the same deals, right? And so, and you see this also in Silicon Valley, where you have Sequoia and A16Z and others all in the same deal, right? It's not like it has to be
zero sum. It's not zero sum. There's enough to go around, and the more we cooperate and collaborate, the more there will be to go around. Right, to your point on the rising tide, and I think people just need to go into the startup development organizations needs to take that approach and have that mentality that the rising tide will lift all boats, and there's no reason to be defensive or territorial. We can win together, and in fact, we'll only win together.
Yeah, we all have to work together to win.
Yeah.
Did you see like a hesitance from investors, just in the technology space? Because I think that's one thing that we're trying to educate family offices and investors that are very used to investing in land and in minerals and in real estate and housing and commercial, and say, well, you can invest in this asset class.
Yeah, absolutely. I think there's one thing about cart.com is we have something for everybody. Because we have the logistics side of the business, there's folks who are very interested in that, and that's kind of what they gravitate towards, and there's others who gravitate towards the software side. So I think we've always benefited from the diversity of the offering. There's something for every investor, and there's something for every customer. So it's there's always something more our sales team can sell a client. But I do agree with your point, right? There's a lot of money in Houston, period. But there's a lot of money in Houston that has been focused on these more asset-based industries. And converting those dollars into other areas, I think has been a challenge. And I think it's we're starting to see more kind of willingness of folks, I think, to actually invest outside of their historical or traditional lane, which is good. I think that the risk is always that they get burnt. I've heard so many stories from family office folks who traditionally invest in like real estate and mineral rights and these sorts of things say, oh yeah, we tried tech like 7 years ago and we got burnt and we're not doing it again. Well, like. And that frustrates me, right? Because, well, one, why did you invest in like one company? This is why we have funds, right? For diversification. You don't put all your money in one stock. You diversify into a portfolio. So I think there's almost some education that still needs to happen on how to start deploying or allocating capital in intelligent and risk mitigated ways into some of these areas, so you can get some exposure, learn over time, and then over time continue to increase that allocation.
I think it's important to identify those partners. That's one thing we're trying to do with our own venture fund and studio is like, hey, we're the partner that helps you evaluate the tech. Yep. And it ends up to be essentially a pre-seed index fund. Yeah. Right. Yeah. And then also once you get under the hood of those founders and get under the hood of their technology, it's like, then you pick your winners out of that. That's the
best diligence. I mean, that's the best way to do diligence.
Yeah. It's like paid diligence.
Yeah. Yeah. Exactly. Yeah. Exactly right. That's the magic of the accelerator model, right? I mean, yes, there is some altruism to it, but it's also, a way to gather intelligence on potential investments.
Mm-hmm. Yeah, well, I mean, it's really important to get to know the founding team. Yeah. And it's also a way to understand, the technology and if there's a there. Right?
Yeah, exactly.
So, I mean, it's difficult for like you and me actually to evaluate some of these tech companies. You can imagine someone that's been used to investing in real estate or commercial, trying to evaluate, like you said, a single investment in a tech company. It's nearly impossible. Yes. It's like getting, asking your parents to evaluate, the latest tech. It's not going to really happen. All right. So any advice that you might have on your journey or experience in scaling and leading a high growth company for some of our startups who hopefully will be in the same situation you are?
Well, I think one of my philosophies is that success in entrepreneurship is equifinal, right? There are many potential paths to success. There's no one right way to do innovation and do entrepreneurship. I always get nervous when there's some pundit or guru out there trying to tell people that like this is how you have to do it and you have to follow this model and you have to fill out this canvas and you have to go through these steps. And those tools can certainly be valuable and helpful, but there are many ways to find entrepreneurial success. The other thing I note is that there's a lot of uncertainty out there today. There's certainly, the just macroeconomic and, as we mentioned, the geopolitical frame is volatile, to say the least. And how do entrepreneurs get the courage and the support they need to take the leap into entrepreneurship within that environment, right? I think that's an important question, and certainly the work that you all are doing is one way where startups can get that support, which is extremely important. So I think recognizing that this is a interesting time in history, and there's always a lot of risk in entrepreneurship, but in some ways that's heightened today just because of the tight capital environment, et cetera. But I think that entrepreneurs have to remember that like when there is fog of war, yes, you cannot see, but nobody else can either. And that is an opportunity.
I phrase that as no one knows anything.
Yeah, exactly. Yeah.
And part of it is that they have to get used to choosing the advice that they take.
Yeah,
because you're going to get a lot of conflicting advice, and a lot of times that advice is just plain wrong.
Yeah,
right.
And testing, learning quickly, right, and knowing when to kind of cut your losses, right, not being afraid of sunk costs. I mean, you're as a startup and an entrepreneur, you're going to incur sunk cost, and you have to be okay with walking away.
Well, Remington, I really enjoyed this conversation and getting to know you more and your journey. Thank you for dropping some words of wisdom on our audience. I have my Einstein socks on today.
Nice.
So I got you some Smarty Pants.
Oh yeah, I love these. These are great. I love these. That's awesome. Those are amazing.
Doesn't look like you have socks on today. So,
no, I don't. But these are my 4-year-old daughter will like these too. She knows Einstein by sight.
So she's on a good start then.
Yes.
Follow in her father's footsteps.
Yeah, we'll see. Hopefully.
Well, thanks for coming on the show.
Thanks, Chris. Good to be here.